Good morning, investors and traders. This is Naeem Azam, Chief Market Analyst at EverTrade, and welcome to our daily technical analysis video. Today is obviously the election day, and I have been up all night, folks, looking at every single headline. What a night it has been. We've been trying to see what exactly the market is doing and how the market is really responding, and of course, more importantly, Donald Trump's reactions to that. But more importantly, in this particular segment, in this video, we are going to discuss how the market has reacted to it and where are those important support and resistance levels. So as always, before we continue, it is important for us to go through this slide of disclaimers and risk warnings. Anything which will be discussed cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, as always, I'm going to bring out the MT4 platform, which can be downloaded from our website, evertrade.com. Now, first of all, what we're going to do is we're going to look at the price action from a daily time perspective. Before I explain anything else, it is important for me to go through these three important moving averages, which are as follows. Firstly, in green is your 200-day simple moving average, followed by that is your 100-day simple moving average, and finally your 50-day simple moving averages. Now, clearly, as you can see from the chart, that the price did come kind of close to its 200-day simple moving average, but it didn't touch that 200-day simple moving average. The price stayed well above that simple day moving average, and then it continued its journey to the upside. Now I'm going to mark that price level just right over here, as you can see, and then the market kind of really moved well above that. But currently the market is, the Dow Jones is very much in battle with its 50 and 100-day simple moving average right over here, as you can see. So the price has not only bounced from its 200-day simple moving average, but now within the 2 days, the price is very much trying its best to cross above the 50-day moving average. For us, the signal to the further upside move is only going to come once the price crosses above these ones, because one thing which is pretty clear is that 50-day simple moving average does act as a very good level of trend direction, and the moment the price crosses above that, we know that now the momentum is fully in support of the upward move, and that could be an opportunity for you to get involved in. But overall, right now we do not have an opportunity. The opportunity is mostly on the sell side. So for investors and traders who like to take the opportunity, who do not like this upward move, who can stomach a little bit of risk, then what the opportunity for them is really put a stop loss right on top of this one, and then you can either go short right now, but keep your stop losses on top of this particular line, just above the 50-day moving average. But if the price crosses above the 50-day moving average, then what you do want to do then is simply flip the situation. Put an entry buy as the price crosses above the 50-day simple moving average, and put your stop loss under those circumstances just below the 100-day simple moving average, so just over here. So this is your 100-day simple moving average. You do not have to go all the way below this one, because what you want to do under those circumstances is put your stop losses just below the 100-day simple moving average and let the price run to the upside. But if the price fails to break out to the upside, keep your stop losses right over here. So let me just mark these ones. So let's say if the price is going to go to the upside, let me actually get rid of everything and then do that again to show you guys in a bit more. So let's say if the price is going to go up, you can go long right now, and then you can go, if the you can only you can only go long when the price crosses above the 50-day simple moving average. Put your stop loss under those circumstances just below the 100-day simple moving average, so just over here. So wait for the price to break above this 50-day simple moving average, put your stop losses over here. On the other side, if the price fails to break above the 50-day simple moving average, and then the price continues its journey to the upside, then what you want to do is you want to put your stop loss just where the 50-day simple moving average is, and let the trade continue its journey once again back towards this particular area. So there are two particular trades. One trade is to the upside and then the other trade is to the downside. So if it breaks above this particular line, then you trade to the upside. But if the price doesn't trade to the upside, then you put your stop losses just near the 100-day simple moving average, which is right in around this particular area. So if the price breaks above that, put your stop loss over here. If the price fails to break above it, then put your stop loss over here and then go towards this particular downside. All right, folks, that's all for today, and I'll see you guys next time.